Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. S&P's up 37 points. I come to you in an all-time high, 59.25 in the S&P futures. We got strong retail sales out this morning, up 0.4% as this market chugs along. You get Taiwan Semiconductor. How about it? Look at that pop. From 187 to 204, so much for ASML, man. Taiwan Semiconductor. The chips delivering as usual, but we got retail sales powering this market higher as the economy just plows higher. And we got the S&Ps up by 0.6% this morning to kick things off. NASDAQ 100, we're up 235 points. That is 1.14% in the upside right now to 20,581. I just mentioned that we got the S&Ps sitting at all-time highs, and you have the NASDAQ 100 about 400 points, so just shy of about 2% on the NASDAQ 100 from all-time highs. The Dow, did we just hit it as well? I think we did. 43,474. Man, this market is relentless to the upside. All-time highs in the Dow this morning. Russell, a little bit of a laggard, sitting at 2307. Pretty remarkable. The Russell still not up to where we were in 2021, which was 2460. That's a solid 150 points above where we're at right now at 2307. Bitcoin, a little bit of negative action, down $575 so far. You jump around to crude, flat right now at $70.38. And we jump to gold. Gold up $6. We got a little bit of volatility this morning. We were at 2704 early. You drive lower. We've popped a bit. Gold in the positive side, sitting right near 2700, which has been the case for some time now. And what do we got? Well, you know what we got, folks. When this economy is hot, what's that mean? Well, it means maybe the Fed doesn't need to cut as much as they thought they might need to cut. And we have the 10-year with lower price and higher yield. The 10-year is off 14 ticks right now, and we got the 10-year yield right back at 4.08%. 4.08. We were just sitting at 4. Not the case. 4.08. You take a look at the daily, and yeah, it's going to be an interesting one in terms of we're sitting right at that 382, chopping around. We were at 115 as the Fed began to cut. But all those cuts they had priced in, the market has taken out in terms of where we are going forward. And you got the 10-year right now sitting at 112.03. We check out the dollar index this morning, DXY. And you know what the dollar loves? Higher yield. Look at this thing, man. It doesn't stop. This is a daily, folks. And there's no red bars. Yeah, you can call these red bars, okay? There are red bars to the 1,000th of a degree, okay, as in this red bar in the dollar index on October 7th, 10 days ago, is only a red bar because you open at 102.487 and you close at 102.485, 2 1,000ths of a point. And then you go to October 10th and you open at 102.879 and you close at 102.878, 1 1,000th of a point, okay? No red bars, essentially. Those two red bars have 3/1000ths of a point. No red bars. This dollar is relentlessly strong. Now, what's so interesting is, yes, we've gotten higher yields, okay? But we're kind of sitting right where we were on October 9th on yields. And again with the gold contract, right? My goodness. This dollar, to bring it back, because keep your eye on it, man, this dollar has not stopped going up from September 30th. And meanwhile, the gold contract, okay, there's September 30th. We are trading higher. We're trading higher on the gold contract while the dollar has jumped from about 100 to 105. Remarkable, man. Makes you think about what's possible if we ever do get, a little bit of a pullback in that dollar index, because priced in dollars, gold. I mean, all you would have had to do was just chop around in the dollar index at 100, and gold would be well above where we're sitting at right now, priced in that same currency. Nonetheless, gold up $7 this morning, even with dollar strength, higher yield coming at you. S&P's up 36 points. All right, let's jump around to some of the action. We check out some of the big dogs this morning. We got Apple shares. This whole market's going to be higher on those retail sales. We're going to jump to those numbers in a quick moment. Apple up about $2 so far this morning. Microsoft shares, they catch a lift, up from about 416 to 419.31. We check out NVIDIA on those strong Taiwan semiconductor numbers. How about it, man? We're going to be pushing all-time highs for NVIDIA today. 140.76 is that number. We're going to open at 140.21. And you jump over to the Analyze tab, 3.44 trillion. 3.44 trillion. Did you get that one? Because Apple, it's right there, right? 3.55. All right, Apple's got them 110 billion to the upside. But yeah, pretty remarkable, man, that NVIDIA, again, pushing the 3 trillion mark. And now we're talking about, man, boy, you're up more than 50% if you bought the dip on August 5th. You're up 40% if you bought it a couple days later. Just remarkable for strength for NVIDIA across the board. All right, let's get into those retail sales, because they are a big one. And the number? More than forecast. Yeah, 0.4%. It's a big number on a month-over-month basis. There was a 0.1% gain the previous month. Cap another likely quarter of solid economic growth. Another likely quarter. Yeah, it's definitely. We don't know it's likely anymore. We got the confirmation, right? It's not likely another strong quarter. Well, I guess this is a month, I guess. So they're saying likely another strong quarter. Yeah, at the end of the third quarter. Okay, likely. No, it's happening. We have the data. That's it. Broad advance shows solid consumer spending at the end of the third quarter. Period. End of sentence. There it is. Look at these numbers, man. Right? 10 of the 13 categories posted increases, led by miscellaneous store retailers. That includes florists and pet stores. Everybody buying flowers and pet food out there. Apparel and grocery stores also posting solid advances. Gas stations decreased. Okay, we got cheaper gas prices, so that's really not a reflection of the economy in any way. Auto sales barely rose, defying expectations for a strong increase. If you're in the market for a car, it might be time to go take a look. See if they got any sales. Maybe you hit them up end of the year, see what you can do. But yeah, those sales figures, like cap another, they put it likely. No, they cap another quarter. Take that word out. What are you doing, Bloomberg? Another quarter of solid economic growth. We'll get into these numbers, folks, but they beat it across the board. Retail sales up 0.4%. S&P's at all-time highs. NVIDIA pushing all-time highs.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. S&P's up by 36 points. We're just a couple points away off those all-time highs we traded at a couple minutes ago. And we'll jump to some of the action we got going on this morning. A couple headlines. How about Lucid? LCID is their symbol. They're an EV maker, and they are pushing out 262 million shares in an offering. And the market's saying, hey, that's going to take our equity. And we're trading lower in dramatic fashion to the tune of 60 cents. That's almost a 20% pop to the downside. And boy, these EVs, right? Look at that run on this thing to 64 first. Then you peak out with the market to the 50s. And you're trading at $2 and change right now for Lucid. And to get that headline up there for you, yeah, there you go. Tumbles following a public offering of 262.5 million shares for general corporate purposes, which may include, among other things, CapEx and working capital. Yeah, shares off by about 20%, man. Whew. So you got Saudi Arabia's public investment fund. They're going to purchase more than 374 million shares of common stock from Lucid in a private placement concurrently with the public offering. They need some cash, man. This is going to raise it. But it's going to raise it out of the equity of current shareholders. So Bank of America is the underwriter. The EV maker intends to grant the firm a 30-day option to purchase up to nearly almost 40 million additional shares of Lucid's common stock as well. They ended the second quarter with cash and cash equivalents of about 1.35 billion versus 1.37 billion at the end of 2023. Pretty close, but yeah. The arms race is on for building out those EVs. You jump to Tesla. They're not fazed by that, though. They're positive to 222 right now. You take a look at the monthly. Now, this monthly incorporates that trade lower that they had following the robo-taxi event. Okay, there's your drop-off there, but you were higher already, right? You double top. You come into that event on October 10th. We're chopping around at 221. Folks, I keep stressing it. Be careful of Tesla. It might as well be a meme stock, and I get it. It's not a meme stock to that degree. This is a real equity, okay, with real money. But the valuation at these levels, man, with pushing out, humanoid robots controlled by basically, humans in the back, radio remote-controlled robots. We've had those for 30 or 40 years, folks. The timeline is probably longer than you think, as is usually the case with Tesla. And the unfortunate part is that's okay. But this market's pricing it in right now when you got a valuation approaching what? Almost 700 billion? Yeah, 710 is the number we're sitting at. All right, let's get back to those retail sales briefly before we jump around too much. I just want to make a couple other points as you're going through these numbers. So there's the headlines. Retail sales. It was already supposed to be strong at 0.3. It comes in at 0.4. Okay? Sales, excluding autos and gas, 0.7 versus 0.3. Because keep in mind, one of those... Remember, 10 of the 13 categories went up. One of the categories that went down was gas. That doesn't matter, folks. We had gas in the 60s and 70s, okay? And then the control group, again, 0.7 versus 0.3. Try and think about the context of a Fed coming to you meaning coming to the market, okay, and saying, hey, man, we're way too loose right now, okay? Excuse me. Let me rephrase. I'm so used to it. Hey, man, we're way too tight right now, right? We're cramping this economy. We're too tight. We're strangling the cost of equity. We got to loosen things up in dramatic fashion. We're going to start cutting by 50 basis points, and over the next 6 months, we're going to cut by 2 full percentage points, because if we don't, the economy is going to be in trouble, and you don't have to worry about inflation at all, because we're over that. It's very difficult to make that case. They've locked themselves into, they haven't locked themselves, but they put a burden on themselves by setting the stage for the path to cuts, and they've said they're data dependent, okay? They've said that 50 is not the new norm, and it's not going to be the norm right now. But it's pretty difficult to make that case, right? This market is at all-time highs, and it's just not stock prices, okay? It is sales, wages. It's just not stock prices, because that's one argument that does get made, okay, that stock market prices are not reflective of the economy sometimes, right? But that's like not exactly what's going on right here. Yeah. Control group sales increased at 6.4% annualized pace. All right. And that means you take the month, you times it times 12, basically, or whatever it is, right? And that's the 3 months ended in September. That's the strongest since early 2023. Look, control group sales are rising at the strongest level in almost 2 years. Before the report, the Atlanta Fed was looking for 3.3% annualized increase in personal consumption for the third quarter. You're almost doubling that, right? Wild stuff. Now, yeah, we talked about the 13 categories, retail sales. They're talking about a 25 basis point cut now, of course. So spending at restaurants and bars, the only service sector category in the retail report, increased 1% last month, the most in nearly a year. Folks, if people are really in trouble, you're not going to see restaurant and bar spending going up a month. Now, are they putting that number on their credit card? Maybe. Okay. Are they a little more comfortable maybe putting that on their credit card because somehow they think they have equity somewhere else? Maybe they got more equity in their house, right? Maybe they're okay with putting a little debt on their credit card because they have equity in their house that they can't quite access right now with a mortgage rate at 6.5% when they got a mortgage at 3.5%. And on a cash flow perspective, that can cause some problems, but on a longer term basis, it's okay because they do have the equity in that when you think about it. Man, remarkable. All right, let's jump over to Taiwan Semi. Yeah, big numbers, Tony, right? Big numbers, man, especially in the face of ASML. You spiked to 206. We're at 202, man. You're up by $15. You take a longer-term look at this equity, we're just blowing past everything. You had a high of 193 back in July. This month, we make a high of 194 only a couple days ago, and we're going to open at 208. 2. You jump to ASML. Even they're going to get a lift on that news. Yeah, it's a slow one, though. But you're up to 692 with the market right now in ASML. And as I said, NVIDIA, through the roof, man, on the Taiwan semi numbers. Did we hit it? 140.30. We hit it in the pre-market, right? No, 140.76 is the number. So within a few pennies of that all-time high for NVIDIA. And as I mentioned, they're only about $100 billion on the heels of Apple. We'll see what happens on the open. NVIDIA could reclaim that top market cap spot. Pretty remarkable, the run, man, that you were talking about. Pretty remarkable, the bounce that we've gotten across the board now. I mentioned you got NVIDIA shares up more than 50%. Yeah, more than 50% from that bounce now. And you even got Apple. Apple's going to open, what are we, almost $40? Apple's up 20% from buying that dip. Remarkable. All right, folks, we're coming back for the opening bell. We're going to see this market digest those retail sales numbers. NVIDIA pushing all-time highs. Don't go away. We'll be right back, folks.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and to reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the stock market open. And you dip a little bit from those all-time highs. S&P's, though, up by about 0.5%. NASDAQ 100, we're up by 1% right on the dot. Dow, up 0.2, we'll call it 0.3, up 121 points. The Russell, the lagger, negative by 1. We jump around to that gold contract, 2,700, we'll call it. 26.9890 is where gold's trading right now. We keep our eye on notes and bonds following that strong retail sales number. We got higher yields coming at you with the 10-year at about 4.08%, the yield on that 10-year and the dollar index. Whew. King Dollar is back, folks. King Dollar is back. How about it? It's been quite a chop, and it's going to be really interesting if you get back up to this 106 level, right? We're kind of in the middle here. You're at the 618. You're sitting at 103.83. We've done this over a 3-week period, okay? What did it take us? It took us about 12 weeks to get to the low. In 3 weeks, you've gone 50% back to you've gone 61.8% back in 3 weeks, right? Following that Fed decision. Volatility everywhere in this market. Gold just so strong over that period of time. Can't say it enough, man. It just keeps ringing. Okay, the other number we got this morning was initial jobless claims. So that number drop after jump due to storms in the week prior. But where are some of the largest declines? Florida and North Carolina. Not surprising, folks. It is interesting. I was talking to one of my cousins yesterday, and I was telling him about, on the roads down here, there's still debris everywhere on the side of the roads, right? We're only talking about it's Thursday now. Power just started coming back to many areas on Monday and Tuesday, and so it's still kind of a mess in certain areas. Thankfully, the gas deal's completely solved. There's gas everywhere now, thankfully, because that was quite a trip. But yeah, there are some anomalies going on in here. Applications for unemployment benefits unexpectedly fell. Yeah, they decreased by 19,000 to 241,000 for the week. They were looking for 260. It's amazing how these numbers just keep beating. Continuous claims increased to 1.87 million in the previous week. That is the highest since July, and that is a much more important number in my opinion, right? Continuing claims. Initial claims, yeah, you can get a lot of volatility on initial claims, but the people who are stuck on the unemployment rolls, they can't get a new job. That's a big one, man. Now, what does happen there is eventually some people fall off of that if they come, quote-unquote, out of the workforce, right? But nonetheless, you keep your eye on that one. And yeah, they talk about the damage done by Helene and Milton. Yeah. Left many people unable to work and possibly unable to file for benefits is what they put in there. That means claims will continue to fluctuate in the near term. Yeah, you better believe it, man, because people are just kind of getting back to any semblance of normal right now. There's still areas, folks, I drive around. I'm in Lakeland, right, Central Florida. We got a lot of farmland. There's cow land, beautiful cows out there. Some of the land is still inundated with water. Still. Yeah, remarkable. You know what I was reading this morning as well? Let me see if I can find it. Let's see if I can find it. Whew, yeah, this is the one. Check this out, all right? And this is where, folks, nobody likes paying taxes, okay? Nobody. So if you have less regulations, you can have bigger businesses, you got less government programs, you need less taxes, right? But sometimes it's okay that they use a little tax dollars for government infrastructure or utilities or something to that degree. Because I read headlines like this and my eyes open, okay? Now, this is where I live. 5 million gallons and counting. Lakeland tallies wastewater spills caused by melting. Folks, if you're in the Lakeland area, don't go swimming in the lakes, okay? That's the deal. Check out some of these numbers, man. Now, you hear this, okay? Older cities, whatever it is, they intertwine in terms of talking about water, runoff, and wastewater, unfortunately, okay? But you look at some of these numbers, and this is, if you're in the area, man, Lake Somerset, Lake Parker, Lake Hollingsworth's a beautiful lake around here. We go with Tommy. It's a nice big lake, got a nice trail around it. All of them, okay? The two largest spills, totaling 5 million gallons, happened at the Glendale Wastewater Reclamation Facility in southeast Lakeland. It's been operating since 1926. You think it might need an upgrade? I think it's time probably for them to upgrade, okay? Now, check this out. At 8 p.m. Wednesday, now keep in mind, this was just as the hurricane was rolling in, okay? I was even in my car at about 2 or 3 o'clock p.m. on Wednesday. It was getting there. Not many people were out, okay, but it was getting there. And you didn't want to be out at 8 p.m. on Wednesday. It was happening at that point, all right? I was sitting in my office. I have a window in my office, and I was very aware that there was a lot of wind, man. And I was saying, all right, I got to be careful of this window. It was really kicking up. But by that point, now keep in mind, it stormed all night, okay? People started losing electricity right around that time as winds were picking up, knocking down some tree debris, etc. The volume of wastewater rushing into Glendale's intermediate pump station exceeded its capacity, and the sewer overflowed for about 18 18 hours, spilling about 3 million gallons of waste. Folks, this is where I live. These are the lakes that I walk around, okay? The community should come together and make sure this does not happen for the betterment of the community. These are lakes that we walk around as families, right? Yeah, the area has been washed down and limed. Yeah, but some of this flow made it into the stormwater system that flows into Lake Somerset. No, it's, yeah. So that speaks for itself. 5 million gallons, and it started happening right away. Like, think about that. They're not even close to capacity if this thing was overflowing for almost 18 hours. Anyway, remarkable, man. All right, we jump over to China. So, $562 billion loan push for unfinished homes. Market says we wanted more. What are you doing for me? That's not enough. Look at where we are. We wanted more. Ooh, look at this market giving it back, too. You jump over to Pinduoduo. They're down about 3%. That's a weekly. We jump back to a 15-minute. And you can see the action overnight. We're trading lower, continued. Man, the volatility in China right now, right? Look at this thing. You talk about a roller coaster. Let's see where we are on a Fibonacci basis. All right, you're coming into the 50% of that run up from 90 to 155. You've given back 50% of that gain so far. You got a couple gaps here. Maybe you're going to give it all back. That would be remarkable, right? You jump to Alibaba shares. You're down about 2% right now. And yeah, China is going to renovate 1 million units in villages within cities. The government set the new year-end target for loans to so-called whitelist properties after distributing 2.23 trillion won as of October 16th. The plan's underwhelmed. Some analysts calling them incremental. The Bloomberg gauge of property stocks in Hong Kong fell more than 8%. 8%. That's a big one for you, man. You talk about it, right? Yeah, and you jump over in terms of Asia right now. Yeah, you get the Hang Seng down about 1%, Shanghai down 1%, Nifty 50 down about 1%, and even the Nikkei, not China, but Nikkei down about 0.7% today as well. Yeah, you talk about it. They face a high bar. They're in trouble, man. We've talked about this before, right? You have their exports having some problems as well. They got domestic problems. If they're going to have exports as well, they got some problems. Look at this one. China home prices in the worst slump on record. Prices for secondhand homes falling in all 70 cities. And yeah, that's the black line here is average prices for newly built housing, and the yellow line is the secondhand houses. That is a big one, man. All right, stay tuned, folks. We're going to come back. We're going to talk a little bit of yields. We got the 10-year sitting right at 4.08%, but this market, we're under 5,900. We give it up pretty quickly on the open. We're going to talk about that too. We'll be right back.
To take charge of your financial future, TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We get the S&Ps up by 20 points. We drive down below 5,900, as they're saying in the den. The sellers, they were laying out there. They were waiting, and they hit it. We're getting a little pop off those lows. S&P still up by 30% right now. NASDAQ 100, we're up by 0.5% right now. Excuse me. We check back in on Taiwan Semi, up by about 9.3%. We check in on NVIDIA. I mean, holding pretty well, man. Yes, you're not trading at 140, but you're trading at 139. You're up by 2.37% right now for NVIDIA. You jump over to Apple shares. They're in the negative, actually, and the race is on, man. So NVIDIA's at 3.4 trillion, not billion, not million, trillion, and Apple's sitting at about 3.5 on that number, and Microsoft, number 3 in that slot, sitting at 3.1, and then Google and Amazon round things out, but they're a far cry at about 2. Yeah, where's Google? Google's sitting just above that 2 number. Google basically slightly in the red, and Amazon slightly in the green today, and both of those numbers right near the 2 number. Pretty remarkable. You got a company like NVIDIA, almost twice the size of a company like Amazon right now, and Google, right? What would you rather own? This is interesting, right? Because it's almost at this stage. What would you rather own? And they're 2 good choices, okay? I don't even know. But in terms of context, would you rather own Google and Amazon or NVIDIA? Because that's where the market cap almost is. Now, Google and Amazon put you at about 4 trillion, or you can choose NVIDIA at about 3.4, or you could choose Apple at about 3.5. Pretty remarkable when you can get Google and Amazon. But hey, NVIDIA, they're crushing it, to put it lightly. And let's get over to some of those numbers for Taiwan Semi. How about it, man? So the big number there, they expect sales to climb roughly 30% in U.S. dollar terms this year, up from about a projection of the mid-20s. It's a big hike. Expectations were already high, and they said, nope, we're going to hike it from there, man. Better than it predicted earnings for September quarter. CapEx rising in 2025 from roughly $30 billion this year. They see they have the business. The outlook should help tamp down concerns, about that ASML. And they sure are leading the pack. Shares up 70+% so far this year. And they're raising the outlook. They're beating across the board. 57% plus gross margin guidance. Whew. Sales growth of about 25% in 2025 looks feasible. Man, right? How about that? 57% plus gross margin guidance. That'll make your tummy warm with some Taiwan Semi shares. All right, let's talk a little bit of yields. So this is the CME FedWatch tool. Gives you a quick guide of where the market's pricing in the cuts. And when we talk about the next meeting, okay, that's coming at you November 7th. For the first time, folks, we're getting a little bit of a rise. Yeah, I guess not the first time. It was priced in before the Fed was going to cut. But right now, we're sitting on an area where the market's pricing in a quarter-point cut to 9-1. Okay? Now, what's always more interesting is we had talked about, if you're following the show, all right, we were always going out to this June meeting because I found that the most perplexing of all. And the reason why it was so interesting is because it was so amazing if you go to where we were a month ago, right? Can I zoom in on this? There we go. Perfect. So where we were a month ago on September 17th, right? The market, if you take these three big packs, the market was thinking that we were going to go down from where we are right now to about 3% for the lower boundary. That was going to be 1.75 percentage points of cuts over the next 6 meetings, maybe even 2 full percentage points of cuts, right? Both of those are at zero now. Not even a tail risk. There is a 0% chance that we are at 3% on the Fed's rate or 2.75, and just a month ago, those two combined for a 57% chance. Okay, right now where the market's pricing is that over the next 6 meetings, right, it's thinking that you're probably getting 4, 5, or 6 cuts. 4, 5, or 6, 25 basis point cuts. We're at 4.75 right now, okay, and the big chunk of the percentages put you in the range. Now, this is over the next 6 meetings, all right? We got November, December, January, March, May, and June. Every 6 weeks about the Fed meets. Not every month. They meet every 6 weeks. That seems at least a little bit more realistic, okay? I can imagine a world where we get 4 cuts over the next 6 meetings. I can. We'll see how the data goes. Maybe they skip a meeting. They come back with 125 basis point cut. They can skip a meeting, come back. That seems somewhat reasonable. These numbers just were a far cry to figure out how they were going to get to this type of a cutting path. But things have reverberated, and we've shaved about 50 basis points already off of where that market thinks the Fed will be over the next 6 months or so. And that's the reason why it's remarkable that you've had yields since the Fed began cutting that have risen dramatically, because the market is repricing the forward path. I was reading an article late last night, and it was talking about how, for more novice investors, saying, listen, the Fed does not set the interest rate policy for mortgages. Okay, they're saying mortgages, the Fed does not set the interest rate for mortgages. That is correct, except for the fact that there's some context there, which is that the Fed rate is factored into the mortgage rate, obviously, when that is the overnight lending rate. It's kind of the base rate that everything begins at, right? It's the base rate that everything is predicated off, because that's the rate that banks can lend at. That's the rate that banks pay for the cost of capital. So, of course, it's going to matter when they come out to the public. And he was making that case because he was stating that, of course, they don't set mortgages because as they cut, rates have actually gone up. But it's not really a fair assessment, because if you look at things, the reason why rates have gone up is because the market is expecting the Fed not to cut as many times as they once imagined. So we will find out, folks. But yeah, this market, I mean, like I said at the beginning, when you talk about retail sales, right, you talk about wages, you talk about initial jobless claims falling, and we're sitting right now at a rate of 4.75 is the lower boundary. Seems like this market's handling that rate pretty well. Is it restrictive at 4.75? Yeah, it's probably a little restrictive, okay? Inflation and the growth of this economy, depending on where you are, probably about 2.5 to 3.25 right now. Maybe it's up as high as 3.5. Maybe you can make the case that, you know what, there's some factors in here that are going to push that near the 4 mark. Well, we're still sitting at 4.75. You can kind of make the case that we're still sitting at 4.75 and it's still restrictive. Okay, but look at the performance of these companies with margins, with profits. Okay, I'm just not talking about share prices. I'm talking about when we get reports from the likes of Taiwan Semiconductor that's pushing 57% margins and talking about growth on a CapEx level from these big foundry companies that is through the roof, right? Seems like they're doing okay right now with where yields are, and it's going to be an interesting path for the Fed. I always think about Chairman Powell sipping that morning coffee, saying retail sales did what? Down the hallway. Folks, one more segment. Don't go away. We're going to take a look at individual equities. When we come back, we got Thursday trading. S&P's pushing all-time highs today. NVIDIA pushing all-time highs. I'll be right back.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. To get the market popping a bit, S&P is now up by 22 points. NASDAQ 100 up by 139. We're taking a look at Uber right now. Uber, $168 billion company. You're up by you're down by 2.2%, and that's because the news is out there that they're thinking about buying Expedia. And Expedia is up by 5.2%. So talks are early. Expedia, even on this 5.2% pop, about a $20 billion company. Now, you better take this seriously because their CEO, Uber's, he used to be the CEO of Expedia, so he knows that business, man. If that headline's out there, he's probably coming for him, right? He served as the CEO of Expedia for 12 years before they brought him in at Uber in 2017. Potential acquisition of the travel booking company Expedia. Talks were in the early stages, and it's not clear if a deal will take place. Well, it's not clear if a deal will take place until a deal takes place, right? But nonetheless, what is interesting here is, okay, I like Uber. I like Uber Eats, but I always talk about listen to yourself a little bit, right? When you have anecdotal experiences, okay? Doesn't mean you have to plow all in on them, but listen to your own anecdotal experiences when they happen, okay? So I'll give you an example. Last night, I didn't have a bunch of food made. I've been trying to be pretty healthy, eating some chicken and trying to stay away from just snacking too much, and I just didn't have food made, and I said to myself, you know what? I think I'm going to order some Uber Eats. Haven't done it in a while. Haven't done it since like my surgery in April, okay? At that time, you make excuses, and they're good excuses sometimes, right? You deserve a little bit. You spend a little bit extra when you're in that predicament, whatever it is. For what it is, folks, I got one burrito bowl from Chipotle, okay? Now, this isn't Chipotle, though. This is really a story, and they get a lot of heat for expensive prices, Chipotle. This is a story about Uber Eats, okay? The bowl was $17. I love guac, so I got a nice big side of guac, which was $6. Together, my food cost was $23, okay? Then they add a service fee of $3.82. I was starving, so I paid the extra $1.50 priority delivery. Taxes were $2.29. Delivery was $3.49. I paid a tip of $5.59, and my total was $40.53 for one burrito bowl. Be careful on Uber Eats. Now, that's not, but hey, I'm not doing that on the regular. Folks, stay tuned for Basil. Thanks so much for kicking your trading day off right here at TFNN. Basil Chapman coming up next with the Tiger Technicians Hour, and I'll see you tomorrow, folks. Have a great day.